So this is my assignment stock market report. I chose to do it on the Coca-Cola company, the one that is the bottling company, the partner of the syrup making company. So the Coca-Cola company is a beverage company who manufactures, markets, and sells non-alcoholic beverages worldwide. And it was founded in 1886, and its headquarters are in Atlanta, Georgia. So the company offers its beverage products through a network of company-owned or controlled bottling and distribution operator, as well as independently bottling partners. And this is one of the main reasons why I chose to do this company, because they have a branch, a control bottling operator in Tahiti. I'm trying to work for them. So the company sells some of the product under the name that we all know, like Sprite, Fanta, Minute Maid, Dasani Water, Powerade, all of this, Coca-Cola, Diet Coke, Coca-Cola Light, and all of these beverages that we all know. And so the price chart that we see here doesn't tell us much, but it does tell us that the company has been doing okay for the past 5 years after the 2009 crisis, and we can clearly see an upward trend of the chart here with some ups and downs, but again, it's a little hard to tell how they're doing compared to the industry, compared to their competitors, but we're going to touch on that a little later. So some key statistics about the company's stock. We can look here at the 52-week range and see that between their low is 36.83 and their high is 43.43, which is quite a it's an okay range, I would say. It would be better if it would have a big range, as especially with the it would be better if the high was higher and the lower was higher too. And looking at their PE ratio, 20.21, it's not bad, but again, we need to compare it to their primary competitors, and we're going to do that later on. And their earning per share at 1.90, and we'll compare it later on also to other companies. And so their liquidity. So this chart can tell us how the company is operating and where they're doing okay and where they're struggling. So the current ratio, acid test and working cap over equity, we're not going to touch on that one, but current ratio and acid test. So their current ratio, which is current asset divided by current liability, as we can see after the crisis in 2009, their current ratio is more on a downward slope. After 2010, at 1.3 went down to 1.2, 1.0, and coming back up right now in 2013, and coming back up today. So this can mean that the company have borrowed money in order to finance their plans or in order to recover from the economic crisis. And it is likely because of 2009 hit them pretty bad. And we can also see that with their acid test, which have been decreasing also. So it bumped up after 2009 for 0.6 to 0.9, and then it kind of stabilized. So this means the company had to use probably a little bit of their cash, not too much though, since it's pretty stable. So they probably didn't use their cash, but use a lot more of liabilities to leverage their assets. And for their profitability ratio, we see that 2009 to 2011 it was on an upward slope, and the company was really profitable. It was 38.3 in 2011. But however, after that, 2012 and 2013, it went down, which can mean that their competitors won a little bit of their market shares, which is likely like Pepsi, Nestle, all these beverage companies that we all know. And since it's kind of a closed market, it's kind of saturated, so they're really in competition with each other to win each other's market share. Since after 2011, 2012, 2010, kind of stable. This is what I think happened is they lost some market shares, but they're still profitable, which is great. On their return on assets. So in this slide, we see asset turnover, net profit margin, and return on asset, and we see that it's interesting. What we can look at here is especially their asset turnover, which decreased from 2000 to 2011 in relation to their net profit margin that increased. But then after 2011, it's kind of stabilized. And that's kind of the image of the company, which is a big firm that is established worldwide and that is pretty stable because of the saturated market. So it's hard to sell more assets, and it's hard to leverage more customers when the market is saturated. And so that's for this one. So for their book value versus the market value, so this is going to help us to make the final decision on whether we should buy it, hold it, or sold it. And so we see that the book value is 7.54 and the market value is 5.08. And this tells us that the company is not doing so well on the stock market. And this helped to emphasize our next portion, which is the competitors, and why, after seeing that the company is still profitable and doing okay on the market, and since we have discussed that they probably lost some market share, we can compare them now to their competitors. And so just by looking at the first line on the market cap, we see that Coca-Cola, which is KO, is not the biggest one on the market. They're second after Nestle, which is NSRJY, and they are ahead up to 237.31 billion market cap, and Coca-Cola is right behind. Well, not right behind, but behind at 19 billion. But still, they are doing better than Pepsi, which is at 124.77 billion. Better than the Pepper Snapple ETF. So just looking at that, we wonder what the book value and the market value are not doing so great. And looking at the PE ratio on this slide, so Coca-Cola was at 20.21, which is better than DPS, Dr. Pepper, and better than Pepsi, which is at 18.97. So this chart is the most recent of all of the other ones, which most of the other ones stop at 2013. This one is actually taken today. So they are actually on the upward slope. And this is going to help us to make the final conclusion on whether we should buy it, hold, or sell it. So we have to look at one more thing, and it's the mother company, because Coca-Cola, the company that makes the syrups, the concentrated of Coca-Cola, Sprite, and everything, then distributes it to its bottling partner, which is the company we've been talking about. And so they're kind of they're not kind of, they're related and they work together. And so it's hard to compare only the bottling company to Pepsi and to Nestle, because they kind of do not compare on the same market. They're not really comparable. So in order to be more accurate, it would be better to compare the mother company. This is what I think, because the mother company and the bottling company together, see how they're doing together compared to the market. And this chart clearly um, emphasize that um, it has been following the bottling partner. If we see the blue line represent the mother company and the red line represent the bottling partner. And so from 2013, only 2013 and 2014, you see that the mother company was not doing so well compared to Nestle and Brown. They were doing better, but if we look at the past few months, the company had taken a big jump, and so this relates to what they're doing right now. So since 2009 and even earlier, they have been really focusing on environmental factors and recycling programs, and they are trying to cut cost on their packaging, which is made of primarily on PET plastics and aluminum. And so they're trying after to create a loop where they get the raw materials, package it, condition it, and sell it to the customers. And after the customers finish with the package, they put it right back in the loop through recycling, and this will help us to cut cost. I didn't put it in there, but 56% of the cost of one bottle or one can is packaging. So more than half of the cost. So if they can cut the cost on packaging, it would save them a lot of money and be more profitable. And since this program has been installed for several years now, we can expect the company to be more and more profitable as more and more partners, more and more bottling more and more bottling, more and more Coca-Cola bottling factories will enter the loop. And so this is why, sorry, not yet, but this is why my conclusion is, if you bought already Coca-Cola, hold on to it, because it's going to do better in the next few years. If you haven't bought it, now could be a good time, but it should, I'll say wait a couple of months and see where it's going. So probably wait a hold. This is my video, and thank you.